Hey there, in this video, I'm going to be talking about Yotta Savings. I'm going to be talking about what exactly is it, how does it work, what are the pros, what are the cons. I'll get into it and just give my honest feedback on what exactly you're getting into if you deposit your money in Yotta Savings. So before I get started, a lot of you who watch my channel may be wondering, I know you talk a lot about mortgage, a lot about real estate. Why are you talking about personal finance, high yield savings account? Well, as a former card room manager where there was poker being played and other casino games, and as a finance major with a finance degree, I think this is right at my wheelhouse. I understand a little bit about human psychology, about gambling, and of course finance, and a self-proclaimed math nerd is kind of my thing. So I think I've got some good insights. I really personally like this, but I'm going to try to be unbiased as I am in all my videos and just go over the pros and the cons, some things you may or may not know, and then you decide whether or not it's for you. So before I get into it, if you like straightforward real estate, mortgage, personal finance on YouTube, I encourage you to subscribe. Only 3% of the people watching this video are subscribed. The other 97%, I don't know what you're doing, but I'll continue to make videos and try to bring as much value as possible. So Yotta Savings Bank, it's been getting a Yotta coverage on YouTube. I'm not a comedian, better at finance. And so it's relatively new, but the idea of a prize-based savings account is nothing new. So for a lot of people, myself included to a certain extent, when you hear about this idea, you're like, wow, that's neat, that's new. It's not really that new. So it's a high yield savings account. It costs you nothing. And I'll get into this more later, but you're basically between their base rate they're paying you plus some prizes you can win, gonna see about 1.8 to 2% yield on your money, to about 2% interest. You can think of it as. And I say it's not new because way back in 2011, I used to read Freakonomics books. I don't know if you've heard of those Freakonomics books, but they're really cool. They talk about different things to do with economics. And from what I've learned and from what I've read, over in the UK, they've got something called premium bonds. It's a similar concept, and they've been doing it for 50 plus years. They tell folks, we want you to invest and buy these premium bonds. You're not gonna get any return, but you're gonna be entered into a drawing. And you might win tens of thousands, hundreds of thousands of dollars. And so the blended rate is whatever it is, but my personal belief is that it's kind of a genius way to incentivize people to save. We know that Americans are terrible at saving. If you look at all the research that says what percentage of Americans have $2,000 in the bank in case of emergency, it's dismally low. People just don't save. So in my opinion, anything you can do to encourage people to save is a plus. I wrote some notes over here about the data on how many people play the lottery. I've got good friends who are really smart, who are disheartened by how the lottery operates, and some of them feel that it's a tax on the poor. If you look at statistics on who buys lottery tickets, who has these big dreams and these big aspirations, it's people who are making lower incomes. It's people that can not afford to literally throw this money away, but those are the people that are buying. 50% of families played the lotto in the last 12 months on some survey that was taken. So half of the people play the lotto. Of those who play the lotto, they spend an average of $1,000 a year on tickets. Every state lotto is different. In California, there's a couple, I don't play it, Mega Millions, some other one. And then of course you can buy scratchers. And those, it's all not very good odds, but as we'll get into in this video, people don't really care. The dream about I can win $10 million outweighs looking at it going, holy guacamole, 1 in 8 billion. I've got a better chance of holding the winning lotto ticket while being struck by lightning. So that's a little bit of that. And I wrote some kind of positives and some things that I feel make Yotta Savings a cool new concept, a cool new bank. First and foremost, it encourages savings. If you take these same people, they're gonna spend $1,000 a year on lotto tickets, and you say, hey, listen, instead of that $85 a month going to lotto tickets, where your chance of winning are very slim to none, why don't you put that money into a savings account? By putting that money into a savings account, we're also going to enter you into lotto, but you can't lose. You put your money in, 0.2% is your base rate, and you're guaranteed that. You also get tickets into a lotto, and those prizes can go all the way up to $10 million. Now, granted, 10 million is 1 in 8 billion shot. 10 million is going to be split a number of ways if you win it. But really, that's the crazy odds you have on the regular lotto anyway, except for that when you pay that $5, that $10, that $85 a month, you don't get it back. In this case, you're done after a year. You're like, you know what? I'm done. I don't want to keep trying to win this Yotta lottery. Keep putting my money in there. I'm just going to withdraw my $1,000. You have your $1,000. You get to take it out. So what they do is you deposit money. For every $25 deposited, you get 1 ticket into the drawing. If you set up your first auto transfer, you get 8 tickets. If you use a referral code, Matthew 312. Put in that referral code. Once you deposit money and then refer somebody, you get 100 tickets, I get 100 tickets, something like that. Really, I'm not gonna get rich doing that. I just personally opened up an account because I was curious. And so I figured I might as well give you a referral code that you can use. So this, I'm sure, is subject to change, but this is how they currently have it structured. A lot of people have done a lot of research really breaking down. If this thing grows and there's more people and there's the same prizes, your chances go down. Ask Sebi, a great YouTuber, talked about how, based on the current model, people are getting about a 2% return on their money. 0.2 plus about 1.8% when you factor in the prizes. If it 10x'd, it grew by 10 times, they get a little bit less. If it grew by 100 times, which is a ton of growth, you're still gonna get about 1.8, 1.6 in prizes plus 0.2 in base. Really good, like better than any high yield savings account there is out there. And in my opinion, if it encouraged you to save, whether it's 0.6, 0.8, 1.4, 1.7, no matter what the number is, that's less important than the fact that it's just encouraging you to save your money. An emergency comes up, you got to take it out, do so. But if over the next 20 years, you're like the average person who's going to spend $1,000 a year on lotto tickets, get that feel, get that fill, that rush by depositing into Yotta. And I've seen 300 here, 200 there. People are getting that rush that they get with the lotto with this, with no risk, right? That you don't risk losing anything. And let's say you put $85 a month, which is $1,000 a year, every single month for the next 20 years. You get the feel, you're excited, you might win, you might win here or there. You average 2% over the whole life of it. You've got $25,000 after 20 years. Do something with that money. The same 20 years of $1,000 a year in lotto tickets, chances are you have zero or next to zero when all said and done. So that's how it works. It's FDI insured. And you know, this is a really well put together, good business. They're FDI insured, so you don't have to worry, up to $250,000, just like if you put your money in Bank of America. They've partnered with Evolve Bank and Trust. So they've got all the mechanics figured out. They partnered with a bank to be able to offer the insurance. And they've also partnered with an insurance company where the $10 million, I don't think I put up here, the $10 million top prize, if somebody wins it, Yotta Bank's not out. They bought an insurance policy. If somebody hits this thing, you're paying them. So it's really a neat structure. And in my opinion, a great thing to encourage people, the people that probably need it the most, to save. Really easy. You download an app on your phone, you connect it to your bank, you send over the money. If you need it out, sure, it might take 5 or 6 days, but you take the money out. You've never lost the money like you would do in the lotto. So in closing, I just wanted to talk about how it's an interesting concept. It's been tried in different states. It's been tried in different countries with varying levels of success. The interest and the people wanting to invest in it has always been there. What happens is state agencies or governments squash it because $60 billion a year is being spent on lotto. I think that's a US number. And imagine if they pay out 20, they're making $40 billion. They don't want to mess with that. So they've got lobbyists, they've got a bunch of lawyers that are going to lawyer up and stop this from happening. But really the benefactors of something like this is the average American person who wants to save $1,000 a year in a savings account. And instead of putting that money into lottery tickets where 60 billion is spent and 40 billion of that's probably profit, put it in your own account. In South Africa, there was a cool story about this thing called Million a Month account, Mama account. Smashing success. And what their thing was, we want the people who are unbankable, who don't have a bank account, to open bank accounts. We want to encourage them to save, get them a bank account, kind of help these people who don't have very much financial literacy or resources. $200 million got deposited. And it was a similar thing. They were going to give away $1 million a month or whatever it is. Because when you get 200 million in deposits, that bank can use that money to make money, so they can afford to pay 5, 10, whatever million a year in interest, right? It was eventually, they went through all the regulatory stuff, talked to people, said, hey, here's what we're planning on doing. Okay, that doesn't sound like a lottery. That just sounds like an award-based system, just like a bank gives you a free toaster if you open an account or something. They got started, they became successful, and they got squashed. They got shut down. So I don't think that's gonna happen. I think that Yotta's gone through all the regulatory ropes and been able to do this successfully and legally. It's FDI insured, so I don't think you have to worry about your money. But if you want a place to throw some money, you want that excitement that comes along with, the gamble. People like the gamble, trust me. For 9 years, I managed a poker room, have tons of friends in the industry, and through all the people I've met, all the people I come in contact with, people like that rush. Go to Yotta, download the app, referral code Matthew 312, get your free tickets, and good luck. Any questions at all, please feel free. If I missed something or you've got further questions, feel free to link it in the comments. If you've got experience with Yotta you want to share, they're fairly new, so I'd love any feedback of that regards. If you made it this far in the video, I appreciate you watching. And if there's anything else that I can cover that you want me to make a video on my opinion of, I'm happy to. Matt@mattthemortgageguy.com with any business inquiries. I'm happy to help. Thanks for watching.